Good morning. Welcome to Forex In Four. Today is Tuesday, October 4th, 2011. We're going to start off with the euro this morning because that's what we always start off with the euro debt crisis that's going on. So let's get you up to date and see what's going on here. So yesterday, meeting of euro finance ministers. They had some problems they needed to hash out to get the final approval for the next tranche of the Greek bailout. And essentially what's happened is that Finland was holding up the process because they wanted some sort of collateral agreement saying that if they go ahead with the deal, what are they going to get back from collateral of Greece if they end up defaulting? Somehow they came up with some convoluted collateral requirement that was enough to satisfy Finland. So I think now it's 17 out of 20 have agreed. They're just waiting on 3 more, and who knows if any of these 3 are going to sort of hold this process hostage at this point. But they're saying right now that they're on target for Greece to get the payment by the beginning of November. So they've got enough to fund their operations for right now, I guess. November is the date. They're going to have another meeting of Euro finance ministers. I believe it's on the 13th, a little bit later this month, just to make sure everything goes through. But some of the things that are coming out of this now are they're talking about, well, we need to change the deal that we made back on July 21st because conditions have changed. Well, of course, conditions have changed, because you didn't do anything about it between July 21st and now. And you're supposed to have these votes already. Everybody's pushed them off. People didn't initially like the deal. Things got worse in the meantime, and now you need to go back and look at it. So now what they're talking about is the big news is the haircut. All right, how much are they going to ask private investors to take as far as losses they're willing to accept? And the haircut had been established. I think it was at something around a 20% loss, but that may be increased. All right, if they require private investors to take bigger losses, that could put potential pressure on the banks in Europe because they have a large exposure to a lot of this Greek debt and some of the other Eurozone debt as well. So you see the banks have been running into problems. Actually, Morgan Stanley here in the U.S. has been taking quite a beating as of late, okay, because people are saying that they have very large exposure to this European debt as well. So depending upon what comes out of that and what they do with this new haircut, that could potentially be a game changer. But you can see Euro sold off overnight. All right, we're looking at the 1-hour chart, and it looks like we're settling in about 131.5 was the bottom. We're just above there right now. Okay, markets are lower to start the day. Here in the U.S., we've got stocks lower. Stocks are lower in Asia overnight. Hang Seng was down pretty big. There's talk about this new currency bill that they're bringing up in the Senate about China. All right, they're talking about trying to force China to do something about the currency peg that they have, to open up fair trade, free trade. This could ignite a trade war with China, which I'm not sure anybody's in the mood for at this point in the game. I mean, China has been supporting the global recovery, and if China goes south, it could take the whole kit and caboodle down with it. But at the end of the day, something does need to be done about this peg that China enjoys, because it does hurt free trade and fair trade around the globe. So, we saw big selling in China. We'll have to see what happens there. But PMI figures have been sort of slowing down all over the place. Just show you right here. Let's look at the Aussie dollar real quick. All right, Aussie, they get impacted by, any time that there's a threat to the Chinese economy. All right, but we also had the RBA rate policy decision earlier this morning, and they essentially left the rates unchanged at 4.75%. But they did go ahead and say that there's room for them to cut rates further if economic conditions warrant it, whether it's unemployment ticks up in Australia, or they need to try and boost GDP or something like that. But right now they've left rates unchanged, and you can see here that the Aussie's trading lower, down to just above 94 cents. Okay, it hasn't been this low, and I don't know. Let's see. Let's go back to the weekly chart. I guess we're gonna have to go to take a look. Last time it was this low was back in September of 2010. So you can see here Aussie selling off. This is the weekly chart, and we're just getting down to this oversold area. So there's going to be a point here where this stabilizes. Perhaps it's going to be at 90 cents, maybe a little bit before there, say this 93.75 area. So we're going to keep an eye on Aussie, see what's happening there, and you can see that Let's go back to the 1 hour chart, keep it short term. You can see that the Kiwi is experiencing the same dynamic, all right? Basically, as the Aussie goes, so goes the Kiwi. And all these charts are starting to look similar, right? It's Euro going down, it's Aussie going down, and we know that they're highly correlated, which means that basically we have dollar strength. And dollar strength we've been seeing lately because of the risk in the market coming from the Eurozone, all right? Not to mention we've got stocks and commodities selling off as well. And what's interesting is that gold is trading higher again, which it had been doing a little bit of a sell-off here. At first it was trading like a commodity, okay, and when oil was selling off with the pullback, we saw gold selling off, and now you see that gold's moving a little bit higher, even as we have higher U.S. dollar. But I guess we're getting a little bit of a pullback here. Okay, so that gold is I don't even know how to describe the fundamental action behind gold right now, except for just look at the charts. But so what's going on here in the U.S.? I wanted to tell you in Australia that the building approvals were better than expected. That was something that also came out that was good for them. So in other news happening, Eurozone, we had PPI figures came in a little bit higher than expected. Okay, and that means that they're probably not going to do anything on Thursday with rates. Okay, but they may use that Thursday rate decision as a platform to discuss what they're going to do with the EFSF. They're going to expand it, what they're going to do with the haircut, all these different things. So who knows exactly what's going to come out on Thursday, but I don't think we're going to see a move with rates. All right, let's look at the pound here real quick. Pound sold off a little bit. We had some short-term support on it yesterday, and that kind of went crashing through here right around, I think it was, 154.60 I identified as that short-term support. All right, we came crashing through it when the whole market sold off yesterday. And we've got UK PMI construction. That came in lower than expected. We're going to get the shop price index figures out later tonight, and then Halifax home prices. Okay, and then we've got GDP here for the UK tomorrow. They're expecting a quarterly figure of 0.2%. All right, if it's better than that, then we may see the Bank of England hold on their rate decision on Thursday. And if they don't increase quantitative easing, then we could see a bounce here in the pound, provided that there's a little bit of stability to the whole global situation from the Eurozone. But if we do get a decline in GDP, then markets increasing the bets that perhaps we will see some further quantitative easing out of the UK. Lastly, just look at dollar CAD here, show you. All right, dollar's been climbing steadily versus Canadian dollar. All right, we know that that's on the risk aversion. We've got oil selling off. Canada's got a high correlation to oil. All right, today we're going to get Bernanke speaking to the Joint Economic Committee. Basically, he's going to be talking about the economy. The market's going to sort of be weighing on his words to hear if he actually comes out and says anything negative, or if he, tries to bang the drum loudly that things are okay and improving here. We know about the problems that we're seeing here in the U.S. We've got Friday's employment report coming out, NFP. 50,000 jobs are expected. That's going to be an interesting report, to say the least. At this point, anything can happen. But one thing we know about jobs is that the bill that President Obama came out with for to try and help create job creation is basically dead on arrival in the House. They're not even going to look at it. They've basically dismissed it as garbage, and both sides of the aisle have done so as well. So not a lot of help coming from Washington politicians. All right, Bernanke trying to smooth things out with monetary policy, and everybody's keeping an eye on the Eurozone to see when they're going to get stuff figured out. So in other words, it's just more of the same. That's what we're looking at here. It's going to be interesting to see. We talk about sometimes stocks can turn around and bounce, but we've seen it on these Mondays and Tuesdays. But I don't think we didn't see it yesterday. That's for certain. So perhaps we get a little bit of a bounce if there's some sort of hope that something's going to happen in Europe. But I think people are waiting to hear about this haircut deal and what that's going to mean for private investors and then banks as well. So keep an eye on the news coming out of the Eurozone. We'll see if Bernanke can juice the markets. Perhaps he says that he's up for additional monetary easing, which could goose the markets as well. So he's speaking at 10 a.m. Eastern time. Keep an eye on that. So that's what I've got for today, folks. Good trading to all.